The markets never move in a straight line, but last week, the price action and especially what happened towards the end of the week set up some really good key opportunities that I am watching closely going into this week of trading. And so, if you want a clear edge heading into next week, I want to talk for a few minutes about what's on my radar and how exactly I'm planning to trade it. For those of you that need a reminder, my name's Derek. I am the founder of the Legacy Profits Club, and I teach people how to trade. And I want to give them the skills and knowledge that they need to be able to pull money from the market on their own. So, with all of that out of the way, let's dive into this week's market breakdown. So, before we talk about this week, we need to talk about what happened last week. So, let's pull up the SPY chart right now and let's talk about where we are. So, we've been in kind of a clear uptrend in SPY since we kind of hit the bottom, literally with a tweet that said, now would be a good time to buy, right before the market took off and a 90-day tariff pause was announced by President Trump. It was amazing. It allowed all of us to insider trade. Anyway, if you watch this, we've basically been in an uptrend, a pretty steep uptrend, a V-shaped recovery ever since then, since the tariff wars started. And last week, if you'll remember in the video, we talked about how we have been kind of sitting in this consolidation range between 576 and 575 and 595 or so on SPY, the SPY ETF. And so last week, on Tuesday of last week, we actually broke out of that range to the upside. And we hit a high on Tuesday of last week of 597.08. And then by the end of the week, we were able to crest above 600. Now, the price action last week was not the easiest price action to trade because you can see that we had kind of some back and forth. There wasn't necessarily continuation. There were some big wicks, particularly on Friday. And then, we would break out of the range and go back in the range and break out of the range and go back into the range. This is very normal market behavior, so it's nothing to be concerned about, but it isn't always the easiest price action to trade. But the important thing to note right now is that the S&P 500 is sitting right at a resistance level here that leads close to the all-time highs. And so this area right here that I'm circling on my chart, that's kind of a resistance area that we are flirting with. And if the S&P can get above $600, it would be very, very easy to see us hitting all-time highs sooner rather than later, like maybe even as soon as like by the end of this week. That's where I lean. That's just my personal bias. Clearly, I don't know what's going to happen in the market, and I don't trade my bias. I trade what the charts are actually doing and what price is doing in real time. But it's just hard to see with this very steep uptrend, us not hitting new all-time highs. Especially one of the things that happened last week that's important to note is we define a trend by putting in higher highs and higher lows. And we've been putting in higher highs and higher lows before this consolidation. And what we were able to do as we broke into a new higher high is we were able to confirm price action from a couple weeks ago as the higher low. So we're still technically in an uptrend, and I'm a trend follower. So as long as we stay in an uptrend, I keep my bullish bias, and if we start chopping sideways or kind of ranging, then you start to question: are we going to go down? Are we going to keep going up? Which is what we were doing for the last couple weeks. Clearly, we went up, so my bullish bias is back until we break below this recent pivot low here of 581.41. If we start to break below that, we could see a gap fill rolling over, all that kind of stuff. But for now, that's not what I'm seeing on the chart, and that's not what I am anticipating. So the important levels you want to watch are the 600 level. Can we break above 600 and hold above there? And then you want to watch this level here for a break, not just back into the range, but a break below the previous higher low in the market. So those are kind of the areas that I'm watching on SPY and my bias going into that. SPY and QQQ trade very, very similarly to each other, but we should talk about it for just a minute because QQQ doesn't have near the resistance that SPY is meeting right now. It seems like it's going to have actually an easier time hitting all-time highs because it doesn't even have to go up that much, 10 or $11, and we're at all-time highs with QQQ. And so similar thing, higher highs and higher lows getting put in. Particularly last week, we had a higher high right here. and then that confirmed this as a higher low, and so we have broken out of this consolidation range that we've been in for several weeks. And so again, I've got a bullish bias just kind of looking into things. And so hopefully that leads to some continuation this week, particularly as we head into like Wednesday and Thursday when we have CPI and PPI data being dropped in the pre-market. Those are the kind of things that could lead to a catalyst to the next move up. And so just something to watch. Or it could lead to a catalyst of selling. You can't guess which direction the catalysts are going. I'm just giving some scenarios here that we could potentially be looking for. The other thing I wanted to talk about was I always love to give a couple of trade ideas just to put on your watch list or to put on your radar or just to teach you how I think. But a couple of opportunities that I'm looking at are actually on Tuesday in the pre-market. The first of those would be ASO. ASO is Academy Sports. And the market's pricing in a fairly decent move on this. As a matter of fact, I think options are pricing at about an 8% move, which actually tracks with a lot of how Academy Sports typically responds to earnings. And so you can see that we're looking here, we're in this kind of consolidation range here between $40 and we'll say $45. So we're kind of been trading in this $5 range for a little while here, and so I wouldn't be surprised if earnings aren't the catalyst that helps this determine which direction that it wants to go. And so the way that I will particularly be looking to play this is very simple. I will, first off, on Monday, so after the close, what I would look to do is I would look to mark the high and low of the day on Monday as kind of an area of kind of being able to get your bearings on how it reacts in the pre-market on Tuesday to the earnings reaction. There's only about 3 scenarios that you can have. It either gaps up on news, it gaps down on news, or it continues trading in the previous day's range, right? And so the way that response is going to be how I approach it for the day as well. So in an ideal scenario, I actually don't like to trade stocks that gap up. I found a lot of times when things gap up in the pre-market, there's some profit taking right there and some trapping of longs, and then it just a lot of times sells off because the move happened in the pre-market. So what I love to see happen, my favorite setup, and this actually happened last week on the IoT trade that I broke down for you guys and actually gave you in last week's overview video like this one. What I like to see happen is I like to see it gap down on good news because you get to sell the news event in the pre-market, but then when the volume rushes in during the day, that's when you really see the hand. You see which direction people and big money is actually going. And a lot of times you can catch trend days to the upside. So if I'm looking for a trend day, I'm going to mark the opening range levels, and then I'm going to wait for it to break out of those and continue, and I'm going to try to get in as early as I can and ride that to a trend day if we have a gap down into a support level. So let's say we gap down into this area, this $40 area here. For me, that would be a potential buying opportunity. If we break out of a range intraday to the upside there. The other thing that would kind of get my attention on Academy Sports is if it just kind of stays within the previous day's range, then I'm going to wait and see if we can break out of the previous day's range fairly early on in the day and start a trend day up that way. That's kind of the 2 scenarios that I would look for trend days. The other thing I would do with this one is if we do get a gap up, I was just looking, this is about 10% shorted right now, so it is on like short squeeze watch. So what I mean by that is like if by chance like they beat earnings, it's heavily shorted enough that could cause a potential squeeze where people start covering, and that could lead to a gap up that actually holds up all day. And if it holds up all day, then I would be looking for continuation in the next couple days or a small cap gap trade, which I have videos on my channel about how to take that trade as well. So that's Academy Sports. The other one that I would be looking at on Tuesday is UNFI. Now, UNFI is not something super exciting. As a matter of fact, it's just a grocery store. Typically, grocery stores are defensive stocks, and so when the market's doing really, really well, they tend to trade sideways. And then if, like, you start entering into recession territory, or you start entering into a bear market, that's a lot of times when people look at companies like United Natural Foods. But the thing about UNFI is UNFI has a history of moving really, really fast on earnings. It's also shorted pretty heavily. And if you zoom out on this chart to like the monthly chart here, you can see that we're sitting like we kind of double bottomed here at about $10, $8 to $10 area. And we are sitting on these kind of like very near these multi-year lows here on the monthly chart, kind of in this consolidation range as well. And so this again is something that could potentially be a short squeeze. It could potentially move up if they have a surprise to the upside on United Natural Foods. This is also something that analysts are talking about right now because they've had some new initiatives recently where they're trying to figure out some changes to the corporate structure, and people will be watching to see if those changes have actually improved their bottom lines. And so ideally with any company, whether it's ASO or UNFI, the three big metrics that I look at, I'm going to look at the earnings. Did they beat or not? I'm going to look at the revenue. Did they beat or not? And what is the guidance that they set going forward? Is it better than people expected? Are they like taking their guidance down? Or are they, some companies have been removing guidance altogether because of tariffs. Those are not good things. And the more of those things you can get in line, the higher likelihood that you have a good trade. And so this one would be very, very similar to me for the Academy Sports Trade. I would look for either a gap down on good news, or I would look for kind of trading sideways. Those would be the two, like trading in the previous day's range. Those would be the two things that I'm looking for to potentially size up whether or not we have the opportunity for a trend day to the upside. Does it gap down into support, hold that support, and then continue climbing? Or does it just continue through from the yesterday's range past that onto the upside? Those are all bullish signs for potential trend days, and so that's what I would be looking for. And if we get a short squeeze, that is not something that I'm necessarily going to chase throughout the day, but it is something I'm going to put on my watch list, understanding that a lot of times short squeezes last beyond one day. And so maybe we would have continuation the very next day, and you could catch a trend day the next day too. Sometimes it's a couple days after that, but I always keep those names on my watch list for small cap gaps or potential trend days a couple days later as well. So those are the two trade ideas that I have this week. Those are kind of the two names that I am watching most closely out of all of the names that are reporting earnings this week. So if you found this market overview helpful for you, go ahead and hit that like and subscribe button so that you're set for next week's prep. I'm also releasing a ton of educational videos over the next few weeks, and that'll make sure that you get the notifications and you receive all of those as soon as they come out. And if you want these levels, you want trade ideas, you want deeper market insights, you want education delivered straight to your inbox every single week, I do have a newsletter that I would love for you to sign up for. It's at the link in the video description. You're going to get setups and early access to community content. The link is in the description there. So take care, have a good trading week, stay disciplined, and I'll see you in the next one of these videos.